Welcome back, Alpha Hunters. Hope you guys are doing well. The market has closed for the week of November the 4th, and there is a lot to kind of talk about, digest, understand of what went on this week, and kind of what's rotating in the marketplace. So we're going to look at some things. We're going to look at the tech big four: Apple, Google, Microsoft, Amazon, and then we're also going to look at some semiconductors and kind of what I'm kind of thinking going forward, okay? Well, let's just go ahead and start out by getting into what happened this week. So I'll just go to a 15-minute intraday chart. And Monday, we had a nice little gap down off of Friday's bullishness. Ended last week very strong. And then just kind of went sideways the whole day. Let me just back it out to a daily real quick. And you can see it right here. I mean, it's just really small, kind of tight compared to all the other trading days around. So it was just really interesting to see as we came into this week with Fed on Wednesday. Yeah, we didn't do much on Monday. So it was kind of interesting to see that. Tuesday morning, though, we had a gap up right to the 390 level. If you've been on live stream or you just heard me in some previous videos, you know I've been looking for that 390 level. There it was Tuesday morning. And immediately after that, sold right off, went down, broke Monday's lows, and just went sideways. In anticipation and basically waiting for Wednesday and the Fed. Wednesday, nice little gap down sideways. And then we got to the Fed right here. Okay. Obviously, we see a nice little spike higher, nice little climb. This is when the Fed announced their interest rate decision to raise it by 75 basis points, or the Fed fund rate by 75 basis points. About 30 minutes later, that's when we started seeing these red candles come in. This was basically when Jerome Powell was talking, okay? The market was looking for him to come out and say, hey, we're thinking about pivoting in December or Q1 or something like that. He was not committal to any of that. And I don't know why people in the marketplace continue to think that the Fed needs to pivot. He has been adamant the entire year about saying, hey, we are here to fight inflation, and we are going to continue to fight inflation until inflation has been dealt with, okay? He has voiced this all year, and it was nothing any different than what he said all year. So, people still expecting the Fed to change their mind, and they'll eventually get the hint, but I don't know when that's going to be. It's kind of like pounding your head into a rock with a hammer, I guess. I don't know. People just need to stop thinking that the Fed's gonna pivot just because they want them to. But yeah, then we just saw the market kind of sell off, and there was about three big things that also Jerome Powell did mention in his press conference. One of those being, they're not looking to pause or pivot unless inflation data kind of tells them to do that. They're definitely not looking to pause. They are continuing to roll off their balance sheet. So that's, another big key one. And the other thing is, even if the financial markets are kind of hurting, they're still going to combat inflation. So there you go. Like, that's what you need to know going forward as a trader and investor. We will probably see lower lows probably later in November, December, but we'll talk about that here in just a few minutes. Just saw the market continue to sell off Wednesday. And then Thursday, nice little gap down, just kind of chopped around real quick. And we didn't do much for the rest of the day. Kind of just traded a little bit higher and just kind of went sideways and choppy for most of the day. Nice little sell off towards the end of the day. Friday morning, then we opened a little bit higher, traded down immediately. And now we'll take a look at the Apple chart because that one is, man, that was some selling. And then traded back higher, took out the day's highs, rolled all the way back down, took out the day's lows, hung out at the low of the days, basically negative on the S&P 500, roughly for about 2 hours. And then we got to the last 2 hours of the trading day, and we saw a very nice bullish activity kind of come in on the SPY and the market. So that's basically kind of how the week went. The most indicative trading day of the week was Friday. Okay, was Friday. We're going to talk a little bit about what happened on Friday's trading session, but let me just take a look at the Qs real quick. Obviously, we've seen the Qs get sell off pretty good. They didn't actually perform all that well last week during the tech earnings week. So they are pretty close to the lows of mid-October. Not going to say we're going to break it here sometime soon. And really kind of what I'm thinking on the marketplace, on the SPY at least, and probably the Qs as well. We're going to get a little bit of a rally here, kind of go for the next couple of weeks. And then probably once we get to the latter part of the month of November, maybe like 2-3 weeks out, we'll probably go make a run back up to the 390 area, maybe pop a little bit higher. Because even though I know we got to the 390 area, and that's kind of where I was looking to be bearish, it was just too perfect. It was just too perfect. We got right to that 390 level on Tuesday, and then multiple selling days, hard selling just coming in right after that. I just didn't trust that. Typically whenever the market works perfectly like that, I would say take it off the table. So I kind of took it off the table. I'm going to look to reload. And with Friday's kind of gap up and price action kind of towards the end of the day on Friday, looking pretty good for push higher, at least here over the next couple of weeks, especially with a U.S. midterm elections next week. So expect some volatility around the markets, probably Tuesday, Wednesday, as we probably figure out who's going to be running the House, the Senate, and that kind of stuff. But yeah, over the next couple of weeks, I do expect some bullishness. We'll kind of see where we get to. Maybe we don't take out that 390 high that we just put in this past Tuesday. Maybe we do get above it, but it's going to be interesting to kind of see where we get, at least here over the next couple of weeks. The Qs, I don't expect them to take out the high, actually, that they put in back on, what day was this? October 25th. I don't think the Qs are going to do this, mostly because of the big four tech stocks. They've been beaten up so bad that really the Qs might retest into this little pivoted low right here around the 272 area. At that point in time, man, I think it might be game on to be bearish on the Qs, but I'm not really sure. I don't think this blue box is going to work out too much, not with tech earnings as bad as what they were. And really, the only good one was Apple. We'll take a look at all those here in just a second. Well, let's real quick look at the DXY, the dollar. Dollar got crushed on Friday, got absolutely obliterated on Friday. Definitely going to come a little bit lower. Probably breaks this downtrend line, to be pretty honest, as the market kind of rallies bullish. And then probably pops back above it, gets back in the channel, and kind of continues going bullish. Rates are just kind of hanging in there, kind of chopping sideways. I would expect the dollar to have a little bit more bearishness, rates to kind of just be more hanging out, maybe trade a little bit lower, but probably get more primed for a push higher on rates. The dollar, maybe not. I'm not too sure about the dollar going higher here over the next couple of months, but rates probably will be. They definitely seem a little stronger than the dollar is. The GLD gold, very strong. Let me go to the gold futures actually here just a second. Very, very strong action off of a breakdown of the yearly low Thursday. Man, just snagging it for a little bit there. And then strong buying coming in all the way through on Friday as the dollar obviously was getting crushed. The gold was performing very well. I really like this. If you like gold and gold futures or the GLD, this is looking very promising. So probably expect gold to kind of continue to perform kind of going forward. Definitely needs to break this kind of downtrend at the 50 exponential moving average. Obviously, you can see it has a hard time kind of breaking it. We rejected here back in June. Got over it a little bit in August, but it didn't hold. Kind of rejected there back in October. So yeah, definitely needs to get over this. We probably want to see a break above this 50 exponential moving average, then a retest into it and continue higher. So that's kind of what you're looking for out of gold and GLD. HYG looking pretty good today. Definitely didn't sell down as hard as the SPY and the market did. Just kind of looking at the HYG here, looking at the SPY. You see the HYG didn't get negative like the SPY did. So yeah, HYG looking pretty good, possibly leads the stock market in a little bit more of the bullish direction here over the next couple of weeks, possibly. VIX, VIX was a very nice breakdown. Very nice breakdown here. Probably comes down to the 23 level. Gets down to the 23 level, I'd start to be looking to be bearish just because that was a very key level back in the tech bubble crash and the financial collapse. The time we kind of got down to the 23 was typically a pretty bearish sign for the market, or that seemed like we kind of were topping out, starting to be a little bit more of a bearish time, or getting in bearish on the stock market. So probably going to come down to the 23. That seems to be the next stop. Yeah, probably just line out time-wise as well here over the next couple of weeks. So taking some of that into consideration, let's just get a quick understanding then of the big four in tech, okay? So let's just run through them real quick. We're going to spend a little bit of time here on Apple. Apple had a crazy monster day. Look at this candle. Look at this candle. This thing opened up almost 2%. I think it traded up to like a 2.5% high in the morning and then traded all the way back down to a low of, I think, down roughly 2.5% as well. A high of 2.7% down to a low of roughly 3.2%. That was over a 6% move intraday. This thing, I mean, look at that first 15 minutes. First 15 minutes, AAPL got absolutely obliterated. You know, compare that to the SPY. SPY didn't get negative. What about the Qs? Qs, they didn't get negative in that first 15 minutes. Apple was toast right out the get-go. Follow the channel, you know I've been bearish on Apple for a little bit now. I haven't really been liking any of the price action, especially all the way back here to late August. It has really been underperforming the market pretty well. And this move was almost seemed like the panic was almost in. It was almost there, man. And you can almost say that maybe there was some panic sellers this morning. I would expect AAPL to push higher. I did close out my bearish position Thursday morning on the gap down, mostly because this move was just a little bit too strong here over the middle part of the week. So I'm looking for a little bit of a push up, and possibly as the SPY gets up into that 390 level or so, maybe AAPL gets up here to the 145 level, fills the gap down from Wednesday to Thursday. I would say that'd be a good spot to possibly be getting in bearish, because that's what I'm going to be looking to do. I just didn't like how fast it sold off. I figured, hey, I could take some profits and then get back in at a better price. But man, it just continued to have weakness Thursday and Friday. That Friday weakness was brutal. But then let's take a look at Microsoft here. Microsoft, yeah, continuing to make yearly lows on Thursday. Yeah, you know, this has been a brutal one. Man, it's not looking too good, but definitely expected to make a little bit more of a retest. Obviously, it performed pretty well today, up a little bit over 3% on Friday, but Tuesday, Wednesday, Thursday was not looking good. Another one that wasn't looking good in the middle of the week was QQQ, Mr. Alphabet himself. You know, this one was making yearly lows Tuesday, Wednesday, and Thursday. Did not make yearly lows on Friday. It saw a lot of buying kind of coming on Friday. So Microsoft and Google, with all the selling that they saw basically in the middle part of the week, you know, they definitely saw a lot of buying kind of come in there on Friday. So expect these to probably help continue to push big tech in the bullish direction kind of as we go into next week, as these guys have been hit really hard after their earnings from last week. So probably QQQ probably comes back up into this 95 price level. And I'd imagine it does it pretty quick. What about Amazon? Amazon, definitely kind of same thing, just continuing to make yearly lows, even into Friday. So expect this thing to kind of have a bounce, probably up into these lows that we had back in the summer, back around the 103, 104 type area. Maybe a little bit higher, maybe up to the 107. So somewhere in there, I'd imagine it's probably going to retest in there. And then all bets are off after that. It's probably just going to continue to roll over bearish. So now that we have kind of briefly looked at those big four, one of the things I want people to kind of understand is how large those four companies are, okay? This is just the heat map for the entire S&P 500, and each one of these boxes also represents the weight and the size that company has on the S&P 500. So if you haven't seen a heat map, that's basically what it kind of tells you. It also tells you, you know, green if it's up on the day, red if it's down on the day, and how much by basically its brightness, right? So Apple, you can see gray here. It's pretty flat on the day. Didn't really move a whole lot. But you can see how large Apple's box is here. Microsoft's box is also large. Google's box, pretty large. Amazon's box, pretty large. Tesla's a pretty large box. I didn't really look at that one. Not going to worry about it right now. But those four have huge weightings on the S&P 500, and they are broken. They are broken technically. So we could definitely see them start to really lead the bear market lower. I just think there needs to be a little bit more of a pause on the bearishness and a little bit more of a retest up in the bullish areas first before they roll back over and kind of really kind of take the market, the SPY and the Qs with it. But the thing to watch out for is as we kind of do this little retest, really watch for, you know, Microsoft, Google, Amazon, Apple, as they start to roll over again, because they've already been making yearly lows this week, and the SPY, not even close. It's not even close. So really kind of watch those stocks as they really start to make lows later on, maybe here in a couple of weeks or so. Yeah, you got to really watch the SPY, because if the SPY is not back down on those levels, but those stocks are making lows, especially AAPL. If AAPL only gets like 145 and starts selling off, and the SPY is not doing that. That is going to be trouble. Okay. The areas that there is a lot of bullish activity is energies like Exxon Mobil. Exxon's continuing to make yearly highs. ConocoPhillips, Chevron, a lot of these stocks, the oil and gas, the traditional oil and gas stocks, they are continuing to make yearly highs and all-time highs actually at that. So we need to just recognize that these guys are probably going to lead a bull run for years, okay? And let them continue to break out higher here over the next couple of weeks, really solidify that they are going to break out higher. And then as they retest here over like December, early part of next year, that is when they retest into their previous all-time high area and then be snagging some bullish positions at that point in time. But when that kind of happens and these guys retest in their previous all-time high, that's when those big tech stocks will be really getting crushed. They're really going to be crushing the stock market as well. And, that's when we're probably going to be having some of those big selling volatility days kind of later on here in the next couple months. So watch out for energy stocks. Also watch out for financials. Financials are looking pretty good. Industrials also looking pretty good. So those are probably going to be looking really well as we kind of continue bullish here, maybe the next couple of weeks. Let those guys go bullish. They'll continue to break out higher. Tech stocks are probably going to retest bullishly. And then once we start going bearish and everything kind of stops doing the retest and breakouts, then we start to turn bearish. We're going to get, tech stocks that start to roll over, lead to the bearish side very quickly, very aggressively. And, that's when you're going to get energies, financials, and industrials. Basically, they're just going to be slowly pulling back into their previous all-time high areas, kind of retesting some key levels. And then they're going to be setting up to go bullish, later into 2023. So that's kind of the way I'm imagining kind of the way things go. We'll see how that kind of plays out, but it just kind of seems to make sense as some of the recent price action just kind of is indicating that across those different sectors, those different stocks and things like that. So yeah, the SPY, looking forward to probably just continue bullish here over the next like 2 or 3 weeks. Let's talk about one other area, and that's going to be semiconductors, okay? So just looking at like NVIDIA, a lot of these stocks, people are buying the dip. People are buying the dip. I get it, man. I get it. Semiconductors, hugely discounted compared to where they've come from. I don't think their lows are in. I really don't. I don't think their lows are in. Watch out for the retest, on some of these stocks, here over the next couple of weeks, and possibly look for some potential bearish plays because look at AMD. AMD is just going sideways down here, roughly at its yearly lows. Like it hasn't really bounced. NVIDIA definitely has bounced a little bit. Micron's also just kind of gone sideways down here. So there's not a lot of bouncing here. So I definitely think the lows are not in on these guys. And to be pretty honest, I don't think you need to rush into buying these. I really don't. I think you'll have plenty of time in the future to basically see that, hey, they're bottoming out for a while. Like it's going to take months for these guys to kind of bottom out. Even if you don't get the exact bottom, I don't want to put capital in and then just have it go lower later. I would rather wait, let it find the bottom, and then I'll snag it on the way back up. I'll snag it on the way back up. I'll miss the bottom. I'm not worried about that. I would rather not tie up capital into a lot of these areas. So yeah, they are not looking the brightest. And as some of these kind of retest into higher levels, I would be a little cautious about getting bullish on semiconductors. I am very much a long-term bull on semiconductors, mostly because we don't make anything without semiconductors in it anymore. But with just all the geopolitical issues out there between China, US, Taiwan, a lot of the trade restrictions, a lot of just the supply chain issues, there just seems to be a lot of issues kind of going on with semiconductors that, it might take them a while to kind of figure it out. And if the market gets to selling and selling aggressively, like I think it will towards the end of this year and the beginning of 2023, man, their stocks are going to get caught up in the selling. Their stocks are going to get caught up in the selling. They're not going to hide out from it. So that is another reason why I say just wait. Let's see where they bottom. And then as they start to bounce, whenever that is out in the future, if it's a year out, if it's 2 years out, just wait. They'll tell you when they're ready to start being bullish again. and then that's when you start hopping in, okay? But not now. There's no need. Let these guys go find their bottom and just wait, okay? But really, that's about all I had for the week. I really just kind of wanted to talk about some of the big four in the tech area and kind of just how they broke down this week really badly. The S&P 500 hasn't really broken down. Even the Qs, which is heavily weighted by those guys, didn't even break down the yearly low. And just about all of them, except for Apple, made new yearly lows this week. So yeah, it's not looking too good out there. I don't really know on the Qs anymore. Honestly, I don't think the blue box is going to happen. I would look more for just sideways consolidation, probably up into that 273, 274 type area, right at the low of this pivot. And that might be it. If it makes it back up to this high that it had back in late October, I'd be amazed. But it definitely could do that. On the SPY, that's kind of what I'll be looking for. Probably a push here over the next couple of weeks up to this high. If it does break over it, fine. But I'm going to be reloading on bearish positions, any kind of retest higher. And I'll be looking for, if you don't make it back up to that 390 level, I will be very much watching for any kind of breakdown lower. But right now, that line in the sand to be really bearish on the market is Thursday's low, which is the 368.79 level. If we break below that, I'll zoom in here a little bit. This low right here, where this wick is, if we break below that, yeah, it's game on. Time to be bearish. It doesn't even matter what price level you wanted to get it to back in the bullish direction. I do think we'll just retest higher here over the next couple of weeks. It was just a little bit too easy this week with the bearish action that we kind of had come in after the Fed kind of talked, and especially after Tuesday morning's gap up to the 390 level. So look for the retest higher. And yeah, I think we'll get some better opportunities to get back to being bearish later on. So Alpha Hunters, y'all have a great weekend and take care.